Hi everyone. Today let's talk about that week employment data. Then we'll get into the calendars. Then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So bad news for the economy is good news for the stock market, as long as it is not too bad. So we had payrolls that were still positive, but less than expected. Jobs data has been very hot here recently. And this is the first one that is really showing signs of weakness, which means the Fed might actually be done hiking, which, like the article says, is positive for the stock market. And as a result of this jobs data, the stock market rallied super aggressively. Non-farm payrolls coming in light. They mention it here, the Fed is finally getting what it's looking for, which is a meaningful slowdown in the labor market. And this is a meaningful decline for sure. Makes sense that they paused once again, and at this point you would expect them to basically be done hiking. We'll take a look at the Fed futures on the Sunday video, but for right now it does seem like that is the case. Probabilities for a December hike sitting at less than 10%, which is being priced into the market now, which is part of why we've seen the massive rally over the last several days. In terms of cuts, we still don't think that that is coming anytime soon, but being done with hikes is still a positive. Moving over to the economic calendar, you can see unemployment rate for the Eurozone, 6.5%, quite high. Non-farm payrolls, worse than expected. Previous read was also revised down, which adds to the fuel for this rally. Unemployment rate, 3.9%, higher than expectations. Private non-farms, worse than expectations. Participation rate, also worse than expectations. Economic factors continue to stay positive, which is that 50 line, but you can see they are all worse than expectations except for non-manufacturing prices, which arguably is the most important relative to inflation, but overall not bad. Economy slowing, but not negative. While the unemployment rate is still cooling, basically all the things that the Fed wants to see is happening without any overshoots quite yet. Moving over to the earnings calendar, everyone did fairly well. Dominion missed on revenue by about $500 million, not great there. Church and Dwight did beat on both. They were down quite a bit during the session. Over the weekend, you do have Berkshire Hathaway, and then we'll get into the rest of the earnings calendar in the Sunday video. Moving over to Max Pain, 425 was the end of the week Max Pain. It was sitting at around 420 for most of the week. Jumped up here today with that big unemployment data. Top of the puts was right here at 432.50. You could argue 434. And we finished above that with the massive rallies at the top of the puts. Really bullish close to the end of the week. Total options 1.5 million. Put call ratio still fairly high at 2.4. But this is a really bullish finish. You would expect another finish up around the top of the puts for next week. And again, we'll take a look at next Max Pain for next week in the Sunday video. Moving over to the charts, starting off with the S&Ps, look at this colossal run, continues to move at a very fast clip, up almost 1% today, did rally up a little bit more than that, started to throw some wicks up to that 437 area, then pulled back a little bit, still technically closed above the 55 EMA on the daily chart. At this point, I am watching trend up around 4,400. You'll also have these highs sitting at 4,380. Certainly some interesting zones. I do have a horizontal level up at that 4,400 area as well. If this breaks 435.88, next one right in that 440 area. We've only had 2 days of bullish momentum. Certainly could get one, maybe two more. But just like I said yesterday, this is a colossal run. It's not going to last forever. Price targets right in this range around 4,400. Could even pause here. Slight pullback maybe down to the 21 at 4,270. That would be interesting. Hold that level and then rally up once again. But right now, 4,400 is my target. Moving over to the NASDAQ, similar thesis. Continues to rally aggressively. 2 days of bullish momentum. Expect one, maybe two more. Current price target sitting at 372.50. Have a level at 372.85, might overshoot to that target just like we did here. Previous rally, hit the wick, sold off from there. And I wouldn't expect this to stop until we hit that area quite yet. Overall, still looks good. If it's going to establish a lower high, it is going to do it right now. At this trend resistance, you can see we hit that here, pulled back a little bit on the daily chart. but I wouldn't expect it to pause here. Everything still looks super bullish, and then we got even more catalyst data here to the upside. Moving over to the Russell and the Dow, what a day here for the Russell. Massive, massive move. That data affected the Russell the most out of all of them, up 2.5% on that candle. Got very close to the 200 and my level here at 176. Got into that zone, couldn't hold it, sold off a little bit. Level to the downside, 172.60. Does seem like we might get a little bit of a pullback from here. This has been colossal for sure. Up 10 points on this rally. We started out around that 163 area, and now we are up around 174. In terms of levels, 176, 172.60. Got the 144 EMA sitting there as well. You'd like to see that hold if you did pull back a little bit. Dow, similar thesis, straight up. Took out the 200 SMA. We're above all of the EMAs and SMAs on the 4-hour chart now. You did start to see momentum fade a little bit, which is interesting despite this massive rally. Next level 434, 343.23. We ended up getting the rally that I talked about from this 329.40 level all the way up to that 339.11 area. Now we're looking at those next higher levels, but we are right at this previous high, and the question is what happens now? Moving over to Apple and Tesla. Apple going bananas despite the pretty weak earnings. Their guidance was basically to stay flat for the holiday quarter, which is typically their best quarter. They sold off about 3% on that candle, touched that level, held the trend, touched it again here this morning, rallied right up to the next trend resistance. So really strong day for Apple despite the weaker guidance. And it is technically above all the EMAs and SMAs now on the 4-hour chart, just like we were going into the earnings. And you could argue that this is a rally, pullback from trend, held the 21, rallied from there, and you would expect a higher high potentially. Tesla, kind of a weaker session. It was pretty strong yesterday, stronger than some of the others, but still holding the same range, 214 to 232.50. We're above all of the shorter term EMAs and the highly traded zone. We did throw a wick all the way up to 226 just for a moment, pulled back from there, probably an initial test, ended up holding fairly strong, and I would expect it to follow through on that move. Moving over to consumer staples and discretionaries. Staples showing a lot of strength on the data, and then ended up giving all of it back and closed basically flat on the day. Pretty interesting. Closed below 68.91. You want to see it hold above that level, which is right where we gapped to and then rallied. But then we broke down, closed below it, closed right at that 144 EMA. If it's going to hold this rally, you'd like to see the 9 hold down at 68.58. Could even pull back to the 21 sitting at 67.87. You also have trend in there. Overall, this is a pretty big rejection candle, and you do have to respect that. Fully engulfing. Momentum starting to fade. Does seem like we might see a pullback there. Discretionaries, similar thesis. Rallied up, hit the 144. Momentum starting to fade at that area. Previous consolidation, highly traded zone. If it blows through here, could be a nice move up to 170.68. Current range 158.03 up to 162. And it does seem like this might pull back a little bit. Moving over to the 50 and the 200-day averages. 50 looks super great. Broke that level, stacked candles, touched the next level, pulled back slightly. Almost right on the money with those levels. 200-day average. This is where it gets a little bit more bearish here. So we rallied up. Candle looks great, but we hit that first test of the 55 EMA, typically where we start to see a little bit of rejection, at least from a technical perspective. These breadth charts can move a little bit more differently. Certainly could push right through here up into this 50 area, certainly possible, but you do have to pay attention. We did have 2 highs right at that zone, broke down pretty dramatically, touched that level, rallied right back to there. And the question is what happens now from this area. Certainly could reject, establish a higher low, follow through to the upside. That would be quite bullish, but you do have to pay attention to this zone. Similarly on yields, these sold off quite dramatically here today. Definitely a change of trend on the 2-year, much lower low from this previous low. Like to see it get below some of these longer term EMAs. We're not quite there yet, but this is good to see. We have yields moving lower, 10-year yield, 3 days in a row of bearishness, but you can see, just like we talked about, hit that 55 EMA, showed some strength from that level. Question is what happens now? Can we close below this previous low? Can we close below the 55? Haven't done it yet. Certainly could see consolidation in this area. That is a first test. I would expect it to hold at least a little bit. Moving over to the dollar, massive down candle. We talked about this potentially happening, how we thought this was a consolidation sell. We did get a wick high, we got a rejection, we got follow through to the downside, took out that 105.50 level, indicating more bullishness to come for equities and more bearishness for the dollar. In terms of next level, 104.40, 103.64 could be interesting. Bearish momentum, bearish RSI. We're super oversold on the hourly chart. Might hold this area, rally up, retest, and then break down. That would be even more bearish in my opinion. And everything looks pretty weak here on the dollar. Moving over to JNK and TLT, what an absolutely colossal move. Again here on JNK, 1.13%, got all the way through that 91 level. Just 2 days ago, we were sitting down around 89, up above 91 now. Look at those gaps, huge move, super aggressive. And you can see there's not actually a ton of volume behind that, which is a little bit concerning, but super aggressive. Everything looks clean right to those levels. The question is what happens now at the 200. That could be some definite resistance. Do you have to pay attention to it? But overall, still looks good. TLT, gapped higher, didn't quite test the 55, sold off a little bit. Not great in terms of a change of trend. You would want to see it hold similar to what we saw here on JNK. At least get a first test. We didn't quite get there. Still looks good, but not as good as you would like. Moving over to the MOVE Index and the VIX. Once again, got another sell-off. MOVE Index stopped right at the 55 EMA. Makes sense. First test. We'll see what happens. Looking at the VIX, broke that trend line, broke that previous low, went straight to the next one at 1490. We'll see what happens now. That is an area where it could absolutely bounce as well. If this breaks early in Monday's session, maybe we have another really strong day of upward movement for equities. But look at momentum starting to curl up a little bit. Very oversold on the RSI, certainly could hold. Do have to pay attention to this. We're pretty extended, just like we talked about on equities, and things don't go in a straight line forever. This could be the area where we start to see a little bit of a bounce, even if it's just back up to the 21 EMA around that 1750 area. Moving over to my accounts, I did pretty well. You can see up at 105,000 now for total accounts, so right around $900 on the day. Most of that came from the puts that I had going into the session. I did roll up those calls as well to give myself a little bit more upside potential, as everything looks pretty strong going up for at least one more day in my opinion. I rolled up these puts as well up to 174 for Monday, got a $1.21 credit. I had originally rolled up to 175 and then we sold off a little bit from that level, so I rolled out and down just 1 point here to 174. So far that's working out well. I do think we might see a little bit of a pullback there, but I should be okay. Qs also looked very bullish. And like I said, I rolled up and out those calls. Now I have $7.64 credit on that position. And then I have some puts here for 366 for Monday. Already have most of the profit in that position. Realistically, I should have probably taken those off. But overall, everything bullish and everything's going well on this very bullish week. Let me know down in the comment section what you thought of the jobs data and the massive rally that followed. What's going to happen next? Will the economy eventually slump into recession? And will the Fed eventually start cutting rates? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.